The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it seemed like most of the fun and euphoria was in the stock markets and the energies and livestock on the day Thursday, kind of a mix to lower bag in the grain and oilseed trade overall. Let's take a look at these markets, talk more about the Fed rate cut this week and how that's impacting things, et cetera, as we near the end of the week. Joining us now, Brian Doherty, Senior Market Advisor at Total Farm Marketing. And Brian, good to catch up with you again, sir. Hope you're doing well.
Hey, Jess, doing well. Yeah, to your point, some active markets today, in particular the equities again, breaking into new highs. They really seem to like the language. It's not only a 0.5% cut, but it seemed like Powell kind of laid out a picture that on all fronts seems like things are in control. I'm going to use that. So unemployment is what it is. It looks good according to Powell. Inflation on the decline, interest rates lowered, big push today, 0.5%. Maybe the signal was, yeah, they acted a little late. Maybe they could have done a percentage last go around and then a percentage this time. But anyway, stock market seems to like it a lot, up close to 600 points today. And that bleeds over, I think, right into the livestock. We've talked all along. It's just about we're worried about demand. Well, at least for the short term, we've got an economic reprieve. It looks like, and we've got the dairy markets up big today as well. So those beef and dairy markets, demand-driven markets.
One has to wonder with some of that good support in those markets, beef, dairy, etc. I think about cattle. Maybe this will be an opportunity to get some hedging done, possibly. Dairy folks, I know we talked last week about some of the volatility that's been in those markets. I mean, this protein sector has been more closely tied with stocks and equities here. We've talked about that too. I mean, is this hopefully a window to get some risk management done, Brian?
I think it is because, as we've talked, you're not really developing new demand markets. So you don't want to be too critical of how things are for people, but the same people that are living paycheck to paycheck are not the same people that are participating in a stock market rally or in general. So I'm generalizing, but I think that's just real. You've got kind of two things going here. Nonetheless, it sends the message that their employment numbers and activity in the job fronts should stay active, and that's supportive. Watch tomorrow. You'll get something tomorrow, different report, or you'll see something different and say, well, manufacturing jobs are down. So I'm not expecting this to necessarily last. But I like the way it seemed to spill over into the meat markets today. Some of us may have made the argument that they were beat up a little too hard to begin with because of the supply side, in particular with beef. I just don't see, as far as I can see in the horizon, I don't see that changing much.
I don't see that either. We'll get a cattle on feed report, I know, after the close Friday, and that could give us some fodder getting into next week. But I look at where things are settling up on Thursday's trade. You got 180 live cattle roughly in that arena. The 245 area on feeders. Some pretty solid price levels there. If I'm a cattle person, to really take a look at putting some floors in, things like that. I mean, from a technical chart perspective, those are some numbers that look pretty solid to me to build a base if you need to.
They certainly are, and it's a good recovery. And what I liked best today, and for example, I'm looking at the February contract right now in the live cattle, just a really good week. Underneath some critical moving averages, the 40 and 50 day to start the week. Now we're above them. Now the key is to hold that on a corrective mode, just to put things in simple math. Trading at, I'm just going to round numbers here, 190 at the end of July, dropped down to 174. So you got a $16 drop off there. 50% of that $16 is $8. Add that on to 174, and that should put you around 182. And lo and behold, 182.35 today. So really nice correction, but high enough to start thinking about how do we defend this. And again, I'll encourage producers to use puts, leave the top side open. I want to believe that the supply side of the equation could be very supportive for prices. A f- excuse me, a few disruptive factors might come along. All of a sudden, you got a push in the live market, and you're back testing that 190 area. We know that consumer demand seems to diminish there. So if we can get some punch, great. Then we can maybe forward contract up in that area. But right now, we try and leave the top side open. But defend against this. If this is only a correction and it's going to tip back over, none of us know for sure where this is going. I think we should defend that through the use of buying a put or buying a put and selling a call.
You mentioned some moving averages, kind of the opposite in the grains at oilseeds on Thursday. I know KC wheat, we broke below the 50-day. Dees corn was right there. Novi beans gravitating around the 50-day as well. I mean, you talk about moving averages, a little bit of a different story in grains, but harvest underway, a lot of different factors at play over in the grains here, Brian.
There sure are, and it's one of those kind of periods where when you look at where like D's corn is now, all of a sudden we're at 406, and a couple of days ago we were at 415, right? So it's not a dramatic change, but it's a change in momentum just in kind of one big day. We're at 415 yesterday, so all of a sudden you kind of flip this thing over, and this time of year, what I get concerned about is just kind of the general sort of idea that, yeah, we kind of gravitate higher and move up and got a nice pennant formation for close to 30 days, 20, 30 days. And then all of a sudden you can take a lot of it back in a very short period of time. Here's the thing. I think the story in the corn market, we're going to hear really good yield results. There just is some really, really, really good corn out there. And then you're going to hear some that aren't so good, that people are disappointed at the drier weather and the test weight and some of the crop. But it's going to be a good crop. The question is it 183, 182? Is it that big? Time will tell. If it is, we're carry out around 2 billion, 2.1 billion. We term that adequate. Rallies are going to be sold by the trade. Um, I think until we just get more time under a belt, get more vision in the southern hemisphere, which I think that's where we need to circle back to. Being steady today, corn was down, wheat was down. I think you've got a little better forecast for rain in that Brazil, sort of central Brazil, but still very dry in that region. So this is just a really critical crossroads. We had some, we kind of shook the rafters here today and yesterday in the wheat and in corn today. Is this just a one day before you see these funds come right back in and exit more or not? I think the harvest pressure and the idea that the rainy season in Brazil will get underway in early October is still the forecast. Is probably enough to keep a cap on prices right now.
Well, when you think about that drought in Brazil, I know Amazon River levels down there are at or near all-time lows. And thinking about river levels, the Mississippi River is getting down to some of its all-time lows again. Some talk that salt water is starting to flow upstream from the Gulf of Mexico. So I think about some of these logistical challenges that could give support to the grain markets here. Not necessarily doing it right now, but there's some of these things that are circulating out there, to your point, Brian, that bear watching, I guess, here as we work through harvest.
Yeah. So on the one hand, I look at this total grain picture and say, you know what, the USD report, it basically confirmed we've got adequate world supplies. Nobody's going to run out of anything anywhere. In particular, it seems like in soybeans, we got our highest stocks usage worldwide. Yet when you look at, how dry it is in the Amazon, right, record low in the Mississippi, last report I read within 3 feet of all-time low in levels. How much grain can you ship out to the PNW, or does it back things up in the Midwest and basis levels go to pot because you can't get the barges down the river? So there's a lot of dynamics here, which I think as producers, I'd like to encourage them to kind of really recognize if you're offered a pretty good delivery basis, I'd probably grab it right now. I know basis contracts got a bad taste for a lot of farmers over this last year, but that was basis contracts and $5 corn, not $4 corn. So at least try and grab that basis into the harvest if it's offered to you in a way that needs to pull product in. Kind of strap in your seatbelt. The world, when I say the world, I talk about, you look at our drought monitor map in the US and look at Brazil. We've talked about disruptive weather, from the global perspective on climate change and warming and what it's done to all these coastal areas and this and that and the other thing. But we've had good row crop production, so it could get interesting if all of a sudden row crop production is challenged in one or two parts of the world, particularly in the southern hemisphere or anywhere in the northern hemisphere. Things will change quickly. But for the very near term, harvest is underway. You've had a rally in beans and corn. You should reward that with bushels that you intended to sell long ago. Get started, hope to be wrong, retain the ownership in the option market if you want to. If you want to be patient, fine. I know we're at low prices on the corn market. Beans, depending how they yield, could still be 50 to 75 cents away from their low if they tip back over.
Good thoughts today, Brian, as always. Anything final you want to mention or reiterate to folks as we wrap up the show today?
Yeah, I think just right now is in the corn market, just be really, really aware of where the market is. We've had very mixed signals. We had a really nice reversal at the bottom, then we had a bearish key reversal shortly after that. On the 6th of September, USDA report came out. I thought, the market might be in trouble because it slid through some moving averages early in the day, clawed back. Then we had a really strong Friday last week, and then we've kind of chopped around here. I would look at ways to defend this market into the carry. So as a farmer, think about in your corn and soybeans, the carry that's in the market. September corn went off the board. I'm going to round here at 390. And if I look out something like the May contract, 435. So just kind of keep that in mind, that difference is 55 cents worth if we have a year like last year where the market continued to slide off. So think about carry is my theme this week.
Brian, if folks want to reach out to you for a conversation there at Total Farm Marketing, I know a few different ways to get in touch with you. How can they reach you, Brian?
You bet. Easiest way is just give us a phone call, 800-334-9779. Let's start with that. And then if you want to shoot me an email, I know a lot of people kind of like to check their computers later in the evening or whenever they have time to. Brian with a Y at totalfarmmarketing.com. Shoot your questions to me there or comments, and happy to return every one of those. So I promise to do that.
Well, with that, we always thank you for the time, the insight. Brian Doherty with Total Farm Marketing. Appreciate you being with us here today, Brian. Have a great weekend. We will talk to you again next week.
Jesse, my pleasure. Thank you very much. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.